Inflation harms the purchasing ability and cash value. It also affects the price of anything and how much of it can be purchased with the given currency. There are factors that lead to inflation, and there is an upsurge in the money supply, which could occur through many economic causes. Monetary systems can increase the money supply by giving more money to individuals, legally devaluing the legal tender currency, or lending new money as bank accounts credits through the banking system by obtaining government bonds from banks on the secondary market. Persistent deflation can raise unemployment and damage the financial sector and the broader economy by making debt service difficult. Therefore, the Federal Reserve of the United States aims for a 2% average inflation rate over time to meet its dual mandate of price stability and maximum employment. Sharp departures from a reasonable inflation rate pose problems for the investors and consumers. Because they can inflict economic disruption, this is the case. They also have a variety of consequences on different assets. Every investment hedging has advantages and disadvantages. The numerous benefits discussed above also have good and negative aspects. Investing during inflation has the effective use of preserving the value of your assets. Another reason is that you want your savings to increase unstoppably. It can also lead to heterogeneity, which is always a good idea. Spreading risk across multiple assets is a tried and true strategy of portfolio construction that can be applied to both inflation fighting and asset growth strategies. Inflation stimulates firms to invest in risky ventures and people to invest in company stocks because they expect higher returns than inflation. Therefore, an optimum degree of inflation is suggested to encourage spending rather than saving. If money's purchasing power declines with time, there may be a stronger incentive to spend now rather than save and expend later. It can raise money, boosting a country's economic activity. It is anticipated that a balanced strategy will keep inflation at an acceptable level. Although looking for cost-cutting options are a good idea, it misses the question on what is unusual about a high inflation economy. With significant inflation, 3 corporate methods become very important. Swiftly altering prices. Emphasizing high profit margin products. Shifting input as relative prices change. In conclusion, don't stray from your investing plans. Define targets or timelines if you have them. For example, if your portfolio demands immense capital appreciation, do not put too much emphasis on tips. Also, if you need money from retirement, do not buy long-term growth stocks. Inflation fixation should never push you outside of your comfort zone.